me make sure that one's correct first. So trend, what is this? Going both straight down. Okay, I'll leave it for now. So that's fine. So this isn't a weekly trend, obviously. Let me think. I marked this purple. So I think what I did is I just floated this out as an example. I think, are you talking about this one, Fredley? Because this is one I just floated out as an example, saying like, oh, if we did this and we did that, then happen. So this one here, I think this is the one you're talking about. Higher one around 50. Okay, yeah. So this one here. Okay, so question was, so do we hit the 4-hour origin? Higher up, you. Same point. Got a daily range trend. So you're like this. Follow the trail of the dailies. You're here to here, right? Change your menus on me. It's a lot big. Okay, that's fine. And so then we end up right here, right? So you went here. The trend hits it perfectly. Yep, that would be a trend. That would be active. Go to the weekly. While the weekly is in play too, it's just an interior part of that weekly trend. Like you can go after both, right? You can go after both indeed. Weekly would have been created before that daily. Like in the moment, and how you will know here if both are active is in this moment actually. This weekly trend wouldn't have been created. And that's kind of one of the tricks with trends, right? Like if you go here, this weekly trend would not have been formed when that daily got hit. Or it's possible that it formed on the exact same. December 23rd. So December 23rd was what? It was a Thursday. So indeed, this would not have been active until the Sunday. So this wouldn't have been active until 3 days later. So at this point, you don't have your weekly trend yet because you know what? This isn't closed. Like it was, okay, all of a sudden it moves down and if you switch back to the weekly, the price is changed. Now we're on 24th and then it moved down again. So now where price should have been, body of the candle should have been here. Go to the weekly, it actually would have been much lower, right? See what I mean? It would have been much lower. So indeed, this wasn't created at that moment. And that's how you can tell. And this is why it gets dangerous to use back-to-back candles sometimes like this. Because while this may be true for a future event, this is the trend that would have been created in the move at that moment. This would have been like your active trend, right? This weekly trend is indeed there. But this trend is what helps create the weekly. You can kind of see this as it's got the same base point and it's got the same origin creation. It's just that this daily trend here was the only one that was created in the moment. So if this helped create the move, like you go to the 4 hour or the 1 hour to see, oh, all of a sudden this trend had been formed on the, and this is possible that this was actually formed on the 4 hour first even, right? So this actually might even be a yellow trend. And this is what held that entirety of that move down because hard closing over this would have allowed the move to not make the weekly right there and go much higher. So, yeah, the daily trend is accurate. So when you're saying that got a daily range trend there that you hit perfectly, it is accurate. Like you would have to hard, but then you have to understand the relevance of the trend. Like you have to hard close it on the time frame it's created. So now you're on a daily time frame. So you'd have to float above it for the daily time frame. In our case and scenario where we were in the trade, you would be fighting a 4 hour origin, and the 4 hour origin would be something that would decide the move prior to the to the daily, just because of the time frame, right? Like how many 4 hour candles you need to close versus the daily has 3 days, and by then the 4 hour candles are going to be well decided what has happened just in the first opening daily candle that may or may not break that move. Consider that daily. Or sorry, I should have said 2 days, not 3. It'd actually be 2 right over the trend. I consider the daily trend. I do. I would consider it for sure. It was what created the move before the weekly, so it would be there. Just how much you're wanting to trade it. So what would be the plan? Like I guess that would just lead me to the question. Like, okay, so let's put it there. What's the plan to use it? Like, how do you use the trend to make the trade in that scenario? So that's where I would get a little hung up on this trend, and not to say it's not accurate, but again, where I would get hung up on this trend is to say, okay, like how are you using this trend to justify it? Are you shorting the trend? Because you really should be trying to short the greedier parts. Like you really should be saying your risk assessment dictates this now, and you really should be saying, okay, we have to have this polarity in the move, right? Like your origin point in the move, because that's going to dictate the breakout. You have to have your origin point in the move. It has different risk associated with it. So when you put all things together, like where do you actually envision the trade happening? Because it can't really happen on the, if you were to break over the trend and start holding over top of the daily, you would already have been holding over top of your origin here, right? So like you can't really trade the trend breakout, because before that you'd be doing the same thing based on this. And if you're doing that, you'd be looking for re-entry on the back test of something. Break over it, you come down, back test, and hard close, right? So that would be a lot easier to justify a trade there. And then if you're taking a short instead of a long, like if you're not playing trend breakout, like, which you shouldn't be here, you should be playing the short, right? So then where do you enter short? You're almost better in this trade, taking the trade that WD took, the one that we kind of prescribed out during the week there. You're almost better trying to go for one of these greedier parts of the move. Even if you went for this one here and you missed it, don't quite remember what this one was. I think this is floating level we put. Does it have a mark on it? One doesn't. So this is actually just a floating level, right? You're actually better trying to take like your 8, 9, or 10, miss that, and then go for the re-entry once you see this is not breaking and you have some confirmed shorts. Like you're almost better letting the shield develop. Like if you were to take a trade here, you take a trade here, right? Like you reduce your risk to this, and okay, fine. So you miss it, it never comes back up, and shields and hold levels start to develop, and then you have that perfect entry right there. You're almost better reducing risk by taking the established move or taking the more polarized point instead of these here. Well, you can take these. That's fine, you can take these, but then, you know, they're the kind of positions where you might want to decrease your leverage a bit. Like you might want to not take that on 100x leverage. Taking this, and that's something I do. Like if you're taking a part of the range that's not as deep, like, you know, 100x up in these 2 levels here, or these 3 levels, 100x. Okay, yeah, that makes sense as your knife catch at 100x. Down here, maybe like 10x or 25x makes more sense. Here you could do 100x. But if you were going to take these, then you have to obviously scale down your leverage, just because it can go that much further and you don't want to be in a liquidated position. So, and also if the move breaks up, then you're also reducing that. Like, okay, here, for example, if you go here, you get liquidated. If you go a little over it and deep dive and then hard close, you get liquidated. There's a lot of scenarios here where you get liquidated. If the move starts to break up and hold, also alternatively, your leverage is much less. So then you're better off taking a lower leverage trade with the same amount of money on that spot if you're like determined to take that spot and you're saying, I'm going to take this trade. You wouldn't take that on 100x right here. It's too risky because there's too much left in the move that you can go after. It makes sense to, when you look at risk assessment like this, it makes sense to, and we can talk about this a little bit now anyways, because this is something that we were going to talk about on day 1 anyways, with risk assessment and how to scale the trades. It makes more sense to have different parameters around each kind of risk. Like this is all, like you can take trades on all of this, but then these obviously have to be lower leverage. So a smaller amount of leverage with the same amount of money is perfectly fine if you really think it's not going to get to here. Or if you want to take all levels, you can take this here, smaller amount of leverage, and then if it pulls back, you stay in the trade. And if it breaks up, you can exit and then take your re-entry here. You're just saving costs. You're just ensuring that you may lose a little bit of money on this, but you still do get to scale in at 100x, which is going to be much more money to make on like 100 or 50x, right? So you can just scale in here. Like here's the scenario like this. Take this trade on like 25 or 10x. It goes down. Yay, everything is good. It starts to break up. You're like, oh no, I have to exit the trade. Okay, I've got a small loss. Let's just call it like a $100 loss. Got a small loss here, $100. All of a sudden you re-enter here at 100x, right? So you take your 100x, you're down here, and you're just like, oh wow, I'm up like, I don't know, $1,000 already, or, you know, down here, $2,000 already. So you can do that. And in the scenario where you are taking this trade, because it is something more important, like an origin level that's pre-stacked with a bunch of stuff right on top of it, you have to then look at it more as a swing trade anyways. So then you have to be in a lower leverage position on a swing trade anyways, where you profits are going to be, it's going to be a bit of a longer trade. So whenever I am, like that's kind of something I tie in hand together. Like I handcuff those two things together. Whenever I take lower risk, I'm always looking to swing trade them, just because if they hold, there's kind of a rule there. Like if the trade holds, it's a lower risk leverage point, it's polarized, it's going to be a bit of a larger move, right? And if it doesn't hold, you lose less and you just re-enter anyway. So then you're just looking to see this as a scalp first. So they kind of go hand in hand. You lower leverage and you increase the time that you're kind of wanting to be in that trade. Hopefully that kind of makes sense. Your original question about trend, I think, is it like, I don't want to say it's interesting because it's actually very straightforward, but it's not a bad question. It's just it's always that push and pull between how do we use trend properly, right? Like you never really, because with trend there's levels and shields, right? So like trend is a great indicator as a trigger point, and I've always said like trend's a great trigger point. If you were in a short from way the heck up there and this is your trigger, you're still in the trade. You're never hard closed. So like it's a really good trigger indicator, but as opening a trade, as an active trade, entering an active position, trend becomes really tough because there's always levels. Like it becomes a trigger to exit, or there's levels that are deciding what trend is going to do. Like these levels here will decide trend, not trend itself, right? So these levels breaking or holding will decide what that trend does. So you're missing a part if you kind of just trade trend. Well, it's good to have on your screen, compounding levels and reinforcement to hold some breaks. It doesn't really tell you how to actively enter a trade in a smart way to reduce risk and make money. Every time you hit a trend, you start creating shields. Every time as a trend is in play, there's always some larger time frame. So the bigger the trend, the larger the time frame that it's going to need to break, because the bigger the trend, the larger the time frame it's created on. So if you have a trend in existence for 1 day, like obviously you're talking about 15-minute trends. If you have a trend in existence for 4 weeks, you're obviously talking about daily trends now. With daily trends, imagine like, 2 days of action around a trend. Like, God, you know how many shields and breaks and holds and other levels you're hitting in 2 days? It's an insane amount. So yeah, it makes trend really interesting in a way that it's kind of useless, but it's not useless. It just has a very unique placement in our minds and our tool. Very uniquely placed because it represents something extremely important and we have to know it. But it's the other things on the chart that tell us if that trend is going to break or hold, right? Yeah, I think you can start. Yeah, Fredley, I think that's a good way to think about it too. I think you can start justifying, and there's sometimes a missing piece there, like this, right? There's scenarios where you get into where it looks like this. Okay? So you have this origin level and you've hit it and you've come below it and you're kind of like really close to it, but you haven't broken it, and you've gotten to this point where you're actually above one trend but below the origin, slightly laddering down. Like this de-escalated very quickly. This came up and de-escalated itself very quickly. But what happens when you hit a level and an origin and you go back below and everything feels good, and all of a sudden you're like, oh, okay, well, I've been here for 2 days, yet we're not breaking down. Well, you've been there for 2 days because you're probably hard closing a trend and you're probably setting up some kind of, last minute slam dunk down to here before you boost up to there kind of thing. And then it's like, well, we didn't break the origin though. Yeah, but you broke the trend. So it can be a case where you do have a missing piece like that, right? In scenarios everybody has where you kind of hover around levels for too long. Well, look for your trends, because then you're probably breaking a trend on a different time frame, right? That can be like a missed piece of the puzzles at times. Yeah. And then the longer the trend, obviously, like it goes without saying, if a trend has only been there for a day, you're talking about 15-minute trends, maybe a 1 hour trend. Yeah, I suppose a 1 hour trend, pretty decent there. You're talking about 4 weeks on the charts, and dailies and 4 hours. And how long has that trend been there also has kind of a relationship there. See that the origin and level tested twice before finally moving trade because of lower leverage. So what I would do here is I would just straight up use shields. Wouldn't do anything else. Origin level, and I would just go to the moment and see where the shields are created. So here's your biggest shield, your 5-minute floating right there. If it hard closes over this, I would get out. You don't even necessarily need to hard close. You can see what the trends are in the trade, right? You can see what the you can see if there's any trends in the trade. You can see what your time frames are showing you. Like, make sure there's no 15. And there's a 15-minute here, so you could add both, right? You could say you need to get below this, and currently your shield is here, and you've got another shield potentially developing there. And I don't think there would be anything on the hourly. That's just way too far away to be. Like, that's not realistic for this trade. 3-minute is in the same spot. You go here, 1 minute right here creates a backside valley. So you'd be in this moment. Trade was happening. Right here, there'd be nothing developed. Say you were in this trade and you're like, oh, what am I doing? Have a 1 minute hold here above. You have one here. It's kind of like backside, and then you have to wait for the front side to be. But this does hard close, but then at the same point, you also developed your first 5 minute shield. So this is kind of like what I would use as the dictator to them. And you know, you're really what you're trying to do is get under this. So in this trade, I could walk through and say that if we hard close above this, as long as there's no like final levels here, I can take a look. You do have a 1 minute level here. You could use this as your last piece. So you could use a combination of a 5 and a 1 there. You just want to use the 5 because the 1 can actually be tested right now. So you wouldn't want to use the 1 body. You just want to use the 5 because the wick right there is just, it's so extruded that it would be the same exact test. Like, it's, what are you, like a $1 difference here? Exactly $1. Look at that, 94 flat to 95 flat. So you could just take that away. And then so if you hard close this on the 5 minute, you'd really be looking to get out of the trade. So your shield would dictate whether you're getting out of that trade or not. So your shields always dictate your trade. And so that would be the thing. 5 minute, 5 minute. There's your 5 minute test right there, right? That's testing that 5 minutes. So that's fine. And then, so you have your 15 here. You have a reverse 5 right here. That's already tested there. So you'd really want to be on the 15, I think. You'd really want to be at that 15. Yeah, you hard close this 15 out of the trade. So that doesn't happen. I don't think that happens at all, right? Like, I don't think this thing comes back up again, does it? Does it come up for a third time? Never hard closes at 15. Creates that. That's right, because that's where the trade, that's where that perfect trade existed, right? That we went through, that WD was talking about. It's 907 or something like. This is the first one, right? This is where we created that trail the day prior. So this is that first level. This is the next one there, and I believe there was one final level. You know, you're trailing down, right? So then you're right here. If backside gets hit or not, or front side, it's all fine. It's all the same part of the range, right? Here. There it is there. Yeah, so this was that perfect trade that we had looked at the day it was happening. So that was like that 15-minute trail happens there. It gives you your 5 minute right there. 5 minute 15. This was a level combination that we had deep diving a little bit into to find. But then, you know, at this point, it's laddering down and you're looking for that entry, right? So then it hits that perfect. That's the one we were looking at. On Thursday, it was on Thursday during our risk guide. Yeah, and that's the one it hits perfectly. So really, if you entered this, like to answer your question there, Sam, you would be using a shield. Like you're always using shield, no matter what the trade is. You always need to have some kind of defined shield. Like whether it's something from the original point of the trade. So whether it's one of these as your original point as your shield, or whether it's a developed 1 minute because it hit a level and pulled back and it developed a 1 minute and it's held long enough to develop a 3 and a 5. No matter what the scenario, you always have to have some type of criteria that you're saying. Like shield just represents, like we use shield as a very specified term. So when I said, okay, I need a shield in the trade back in the day when I had started teaching about shields, like it's just about having some kind of protectant layer. So whether that's a trend, a level from the past that you've hit, like a shield could indeed be this right here. If you decided to never use this, like you have to decide on your own shields. Like the shields are always the same in the trades. Like if you ask somebody to do oh, where's your shield in the trade? Everybody in the group should relatively come up with the same thing. Oh, look, there's a 5. It hit the level. It pulled back. It created a 5 minute hold level, and it can create a 15 in the future, just like what we saw here. Or even if it created a 1 minute, you know, go to the bottom side of this chart. Just take where it bounced, right? Just take here. Like, where is your shield? I'm sure there's a targeted hit. I haven't looked, but I'm sure if you just simply went in here, maybe like an hourly target or a 4 hour or something, you just go in here and follow the trail. I'm sure you're going to find that exact point. You've got this here, right? You've got your level test here. Start from down here. So that's there. So it brings you to this here, which is there. So you're kind of like right here, reverse, right? So right here, reverse hourly, or maybe there's something else. Maybe it's a 15 or a 5. Hourly reverse. You can take the top of the 5. Does that hit anything? It does. So you wouldn't be here. 5 minute there leads you, which is already that hourly test anyways, leads you to there. Okay, so you could be reversed here. What about 5-minute levels? All right, is there anything clear? Is there any like floating levels or anything that's really clear here? There's this right here. No, that's not. So you just really have the hourly. That's it. So I would just use that. There maybe sure you could find it. Like you have your hourly range right there. Your level exists somewhere between here and here, risk assessment wise. Your level exists somewhere in there. You can just go to the greedy. Backside, front side. Backside, front side. Like something here has to get hit. I already know the hourly gets hit because we already saw it. Then you could just see like, oh, is there a the same RA that we do, right? Like the same risk assessment that yeah, it doesn't even reach those lower ranges. It just hits that hourly. But that hourly is pretty straightforward. Like that's the range of the move. That's so even in this move, you hit this here and you'd have to develop some type of build. So you're just saying like, okay, don't, even to start, just don't hard close this. Just don't hard close this. And then as time is going on, what you're really looking to do is you're really looking to start making those higher time frame levels too. Like you really need to have markers on this chart where you're like, okay, well, you got a 3 here, a 5 here. Like these are the points we need to get over to develop our bigger shields. Like these are really what we need to gain. So, and this is easy to follow. We don't need to change these colors. It's 1, 3, 5, 15, right? This is very important. You just don't hard close this and we're kind of good, right? Like let this move go on. It needs to gain that level. Has it created a 3 or 5 or like anything yet? No, it hasn't. So you're still in this, right? You're still here, and and then you could do this as well. You could say, got a 1-minute trend. Do you have any like 3-minute or anything yet? You have a 3-minute developed. So you have this. You could use this as a shield. You could also use that 1-minute right there. Got this. You just got to develop some type of shield that allows you to. Let's check the 5. Right. Okay, good. We've got the 5. This is even better here. We've got a 5-minute trend, 5 to 5. So this is becoming a little clearer because now we have like a 5-minute trend. If we break that 5-minute trend, don't expect the 1 minute to hold kind of thing. Or at least it can, you have to have something that can hold you there. And now you have your 3-minute here. Right. So as the move is going on, you have to develop these shields in the trade, and it's as simple as that, right? You get over that 3, you're following the trade, you hit your 1-minute level there, you still hold it. Now you're here, right? Now you're here in the move. Do you have anything else yet? You got a 3-minute. That didn't really work out too well. Your 3-minute is assumingly going to be here now. You have a 5-minute. You have 1 there. Yeah, 5 right. So you see, you're just dynamically changing this. 1, 3 on the bottom, 5, and also, do you have anything possibly on the 15? You even have a 15-minute like this. Just turn okay, because that one's going to be the 15. And you do actually have kind of your first real trend. So that's good because even this could be your shield. If you were to RA this would be your 10 out of 10, right? Come on, going forward. You have anything else yet? Like so as the trade is developing, you would be doing exactly this, and you'd be saying like, okay, well, yeah, I got to develop my shields. There's the 5-minute. I need to gain that. Kind of just go through everything and delete it here. What about a 15? Do we have a 15? We do. We have a 15 and a 5. So this is good. So let's just not use the 3 right now. We don't really need to worry about the 1. I think this is pretty good for shields. I think if you were to go back again, I don't think a 1-minute would be in play here now. I think the scenario that would be in play is you kind of hit this trend, go like this, you go here, and you come back above trend. As long as you don't lose this on the 15 now, because this is the 15-minute trend, you're good. You've got that shield in play, right? So now you're really just trying to gain some more. Got a 3, that was hit, so you could move your 3 here, but then again the 15 is kind of more important because I don't see a 3 where you hit the 3 for the $15 less, and then also within a 3-minute span also have the 15-minute not be the active level. That's just kind of a weird scenario, right? What do we have now? Time is going on. We really need to continue to develop our shields here. Nothing there, nothing here. You've got the 5 there, but again, then this 15 kind of becomes your important marker. So you could update this shield to here. So right, like you're right there now. This 15-minute kind of becomes your important marker. Actually, you've already created the 15-minute shield, so now you have your shield in the trade, right? So I think at this point you're just kind of good to hit play and let this thing fly up now, because you're really not going to lose this move too much. Hit trend, you get re-entry. I'm thinking trend has some kind of what was this one? The original, what was it, the hourly or something, or the original 15? Oh, I see. That's the 15-minute backside is getting. Okay, yeah, that's great for it. Now we want to go back to this 15 here, and then that 15. Yeah, I mean, testing trend there is good. It's the balance between hitting the 15-minute level, because it can hold up here, it can hold body, it can hold a range inside the body, it can hold trend, and it touches trend. Like, you had the right trend, right? So that then it's just like the development of the shield in the trade, right? I'm sure you hit play here. I'm sure it goes up a little bit, comes down below trend, does some little, does too. Yep, exactly what you expect. Comes up a little bit past the level, goes down trend, because you're developing the higher stuff, or at least you're trend gets hit again. Yeah, you've got the hourly there now. Like, you're developing the higher stuff by doing that. Where does this trend get hit again perfectly? Thought that I right there, 1, 2. This looks so different when you change on the hourly, I swear. Yeah, now we're underneath that trend again. So, like, I think that's the way you have to look at it when you're taking these trades and you're developing these shields. I think you have to look at it like that. I think you have to look at these shields as development in the moment, and you have to be walking through it minute by minute by minute to say, okay, I've hit my target. This is going to have its own whole ball of wax. Like, this target here is going to have its own big ball of wax, which is your RA. And then, post RA, it's pre and post event data. But, before the level gets hit, you have all your pre data that allows you to decide, risk assessment wise and procedurally, which level are you targeting in the queue of your RA, your 10, 9, 8, 7, 6, 5, 4. And is there subgroups that you're targeting because it's a moment of hyperpolarity, like up here? You've got a moment of hyperpolarity with a subgroup in it, right? So then you have your decision prior, and then post analytics. Once this happens, once this event gets hit, once this event gets triggered, then you're developing shields based on the trade if you took. And if you say took this down here, this was your level. Say you RA'd this down to this like 1 or 3 minute level, or whatever we RA'd this down. So you tried to take this trade here, right? That trade misses. So let's talk about this for a second. Let's just delete this RA thing here, make it a little clearer. So let's say we RA'd this down like we did to that. So like whatever we found in there, we'll just say it's here. That's fine. RA'd this down to the 9 out of 10, right? 9 out of 10. We said this wasn't greedy enough, so we did not take this trade. Okay, you have your 9 out of 10 here, right? It all falls in the same range, right? This is all falling in the same range. So this is like the 7 out of 10. There's an 8 somewhere. This is a 9 out of 10, and then maybe this yellow one is it for whatever reason. That's fine. You have a 100x trade here. You never took this position, just like this one up here. You never took that trade up there, right? You never really took that trade because you're trying to go after the 100x trade. Fine. You also didn't take the lower leverage trade. Fine. No big deal. If this starts developing shields, that's where you get in on your second entry. That's where you say, okay, we have shields, right? You have shields. They are developing. You are creating 5s. You are creating 3s. You've got a trend. You're starting to create bigger and bigger time frames. You missed this trade because you RA'd it and you tried to reduce the risk by taking the lower trade. You didn't take this on the lower leverage because you really were certain that it was going after this level, and you really didn't want to start the day on a losing trade. Maybe it's your first trade of the day, and maybe you really wanted to just catch the stupidest knife. So for whatever reason, you didn't take this trade. But then once this trade develops those shields, then you just have to like scribble this off the board, and you just have to say, okay, clearly we're not going to go after the deeper target. The range is holding, right? Like clearly we're not going after this. This range is holding, okay? And you have shields that are now developing inside the trade. So you've got 5 minute, 15 minute, you've got all this information, and this, like there's a lot of spots to enter in here. You're talking about 1, 2, 3, 4, 5 hours before it even breaks above this. So then even in a scenario where you're trying to take the greediest part of the trade because you RA'd it, it has a subgroup, okay, fine. The greediest part of the trade didn't actually get hit, and the polarity point of the trade, because remember, this is polarized, it is the origin level, it's a polarized level here, that holds it down. You can still re-enter that trade thereafter on high leverage as well. Like you're almost better entering high leverage down here or up here, because this is high leverage is really risky. It's really risky. So you are better off doing it like that. You're better off saying, you're better off saying 100x here or 100x wherever it is in here, and this trade, which is the highest time frame that's holding the range, acts better as a lower leverage trade because it protects you from that stuff, right? But still allows you to be in the trade at the best price against this. However, if you're using that lower leverage here, you're just wanting to be holding this position longer, as to where these are, going to be more a continuation of scalp trades. Like, you could even say, to go to the inverse level right here, right? Or here, you go to the body of the inverse, 100x here to here. Like, that's probably a great trade, right? Like here to here. Look, that's why was that $5,000? $5,000. That's $6,000 if you're using, well, I base it on my leverage. You have to base it on your own formula, right? I use 2,500 100x, but that's $6,000, right? Or less, even if it's just 1%, whatever that means for you, right? Even if it's just this to this, right? What is that? What is that? Don't get liquidated there. You're still over 1.x% on 100x. Like, this is still an insane trade, right? So, when you're talking about these ranges, there's different ways you can trade them that make more sense, because a range can, like, there's a lot of deep points in a range, and to start taking 100x on the interior points when the only requiem is to hard close a candle here on this origin level, like, it opens the possibilities that these get hit. So, like, why take I'm certain that if this is 100x, it's liquidation to the deeper targets. Certain of it. 77, like, it will be liquidation right around here, right? Like 55 to 67, depending on the contracts, right? Like, it depends on the short and long liquidation contracts. So, but I can't remember the price of the shorts and longs. Can't remember the term. It can be as low as like 57%, and it can be as high as 70% on Binance, depending on the contract price. We know. Wait, I skipped over a few comments. Hold on. Yeah, and you go to the 4 hour here. I'm sure it does test multiple times, 3 times, 1, 2, 3. Yeah, it's just, does it hard close or not, right? Because then you got to realize this is creating some kind of interior ladder. Like, all these tests in here are just creating some type of interior ladder that are creating your shields and holds. Like, that's when you're seeing these multiple tests. Like, you have this test here, closes down, and you have this here. This is probably, looking at this looks like it's like a 15-minute shield. That's a little loaded because we did this, and I know there's a 15-minute level in there, but this does look like a 15-minute shield just because you got 1, 2, 3, 4, 5, 6 candles. It would be tough for it to be an hourly. You'd only have 20 candles, or 20. What did I say? Times 24. I mean, 6 times 4 is 24. You'd only have 24 candles, and most of those candles would fall under what could. There's maybe only like 2 or 3 candles that could even create the hourly. I don't think there. But a 15-minute I could see. But we already know that because it's like we already got there. And then you get 5-minute. When you're seeing that, that's really usually what you're seeing is just the attacking of the higher time frame, the higher time frame hold levels from the shields, or the lower time frame versus what was created. Lowest 15 minutes still untested. Down here, this guy here, that's tested. Test the wick, tested. You could use the wick as a reverse, but I wouldn't, because it's tested so perfectly there. I would just start to move into this part of the range, backside here. Start moving. I don't know if it's gonna hit the 9. What do you mean when you say later? Possibility it's later. Fields assume that it won't. Well, if it hits the range, then you have to see which kind of, like, if you've developed a 1 hour shield and you've hit the range and you're hard closing over a 1 hour level, like, it's going to be pretty tough for it to be coming back off of that, right? Depends on how quick it hits it in the moment. Coco, if you are out here, right, you hit this level. Let's say trend isn't here, so let's just kind of take trend away for a second here. Let's just work only with levels. Say you hit this level, right, and a lot of time has passed, and you've created a 1 hour shield there, which also on the backside would create a 1 hour hold backside, and you're coming over top of these levels, like, and you're just kind of sitting here lingering. you know, like what's a scenario here that you're asking? You say that, okay, it can hit this level, but it's already started to hard close all of the stuff that this created, because it's happening way out here on higher time frames, on 1 hour hold levels, say. And so it hits this and then holds this level here, right? Like then it's holding an hourly hold level that was developed after already breaking this is one right here, the 1 hour hold level. It's created the adverse hold level to hold it up. So the hold level that was holding it down, all this stuff hard closed that level, and now you've got like a backside hold level here that just hit. So is it gonna, can it go after this? Yes, but like you wouldn't expect this to be the short at that point. Like when you've done this, once this is executed and you've hard closed this hourly here, and you're starting to close above valleys, you would never take this short here. That's way too risky, because even if this executes, it's gonna go like that and then right, or it could even just go like this, and then straight up. Like I've seen these kind of like 1 minute candles where it does something like that. Alternatively, if it happened relatively quickly and it did this and this and this and all this stuff like that, and it went here and it fell straight down, then yes, this could hit, because there isn't that bigger development here. Like what would be the biggest developed level here? Like maybe a 15 minute, and then you hit that level and it never hard closed that 15 minute. Like that's a scenario that can happen. Right? So then you kind of have to be mindful to know. And then also you have this weekly trend out here. So are we talking about like in this moment, or are we talking about it's done all of, oops, it's come out here and it's happening out here? Like, is it happening out in time and space when, is it happening out in time and space when, you know, you've already starting to close this? Then this doesn't become a smart short either, because you're just closing larger events, right? So it can hit still. It's just, you know, time is kind of important there, right? Because then all of this, they go to a 4 hour chart, and now you've got, you know, 4 hour hold level right there, right? And this 4 hour hold level hit perfectly. Go to your next one, 4 hour hold level, hit perfectly, right? And this can reverse the move. Is there daily yet? Also have a daily right here, right? So are you all of a sudden hard closing this daily? Are you hard closing this daily up in this area here to say you're going to touch this and then come right back down again? Like that would be another unlikely scenario, right? Like hard close the daily here on a daily and then hit this and pull back, right? So the problem is the more time that passes, when you're talking about this being a potential, the more time that passes, the more levels of higher time frames you're starting to create here. So even by hitting this, you run the risk of, you know, closing a bunch of information in here that's vital. So it's really important to be aware of that, you know, once this move has hit and pulled back, it's developed its attack on this trade, right? Now you're going for a completely new part of the move. Now you have to kind of re-RA this piece here. Now you have to re-RA from kind of this point here to say, like, look, this is polarity in the move now. So now you almost have to do it like this. Now you almost have to have this yellow one here, and this would stay up there. Let's be clear about that. This has to still be there, right? But now you'd have like another RA here that would be red, and you'd have to kind of do an RA for this and this, right? Yeah, it's like, it would be really dangerous if you start hard closing over this daily here, or create another daily here and then hard close over both. So yeah, it definitely can go after this, but then, you know, it would almost be a loaded question to just say yes or no. You'd have to kind of go through a multitude of examples to say, yes, it can in this scenario, no, it can't in that scenario. But what the most important part of that is understanding the why it can and can't develop that. Like the more time that goes on, you understand why it would be more dangerous to be kind of in this area, regardless of this guy here, right? Regardless of that guy there. You know, at this point, you've got the weekly or whatever this purple trend is. I don't even know if this is the weekly. I think that's the correct weekly, or that would be the float. I'm not, I don't want to say this is the weekly. There's some kind of trend here. Well, you've got this purple trend. Let's call it the purple trend. You've got the weekly and you've got the daily here, down right here. So you have got criteria here that if you start kind of floating around here, the likeliness that this origin is going to hold you, it's likely not even in play anymore, because you're hard closing bigger events that have happened before that. So then you may come way the heck up here and hard close below this origin still, and this origin might still be in play, but that would invalidate this as being smart trades, right? Or again, you have these scenarios where it's very interior and you're still saying, like, you know, an event that I could see happening, another possibility here is like this. You hit that, right? Come up, and your question is now this. Like, let's assume this purple trend is accurate. Your question, because this isn't even a real trend, I don't think. I keep going back to this stupid trend. I need to delete it. It's driving me crazy. You're here, and you're saying, oh, let's hard close over top of this trend. And then so you hit this level and pull back below this trend. And this happens all relatively fast. That would be a scenario where this could happen, right? Or you go here, you go like that, you go like this, you come down like that. That could be a scenario that happens. You go here, you come straight down, right? You go for a second move on this because you're following an uptrend interior that was created like this. That could be a scenario where this gets hit, and it could be a good short because you break that trend and then you create a hold level here, and you kind of refuse to go after it, but then you lose it, and then this is your hold level. So like these are all scenarios where time is important. But to say that, you know, to say that you could go after this again, you have to base it on the other events that are created, the trend, you know, this daily hold level, and then you have to see what's in the moment because those are your shields on the larger time frames. So yeah, I mean, you break the shields on your larger time frames, and you know you're going to start moving up. And on the time bomb for the 8 out of 10. It could. So we have this marked as yellow, which it should be a 4, right? So let's see. Yeah, that was that backside. So you indeed could hit that, and then you could trend this. You could, you know, trend that to there, up there like that. You indeed could do that. You know, your time bomb on the 8, you've got a 4-hour level, but you know, you don't want to be in this trade as a short regardless of the level. $44,394. 15-minute. 44. Right here. This right here. Oh, I have it marked on my doing. Okay, let's just ignore that for a quick second here. Okay, so your question was, is that 15 minutes still untested? This is a tested level. It's tested here. You could either reverse this point here, but more importantly, I would look inside of this range. I would look inside of this. This is that tested level here. It can continue to hold the 15 and create a trend, but I would look for the part of the move that's, you got 15 here, this there. 3 minute, I don't know if I'd really want 3 minute here. 3 minute there is tested. Tested as well. Ladder off this break. Ladder off this break by reversing this. What else do we have? 5 minutes, no real 5 minutes. Could also have that 5 minute ladder, and then I would start measuring like what's the worth and the value of potentially missing the trade. Then you also have this here, right? Because then you also have this here that could also ladder the move. So you start RAing this. That's tested, but this is not. But the range is tested, but there's levels inside the range. So now what I would say in this trade is I would go to my highest time frame and say, okay, well, there's Jesus. So now I would go to this and I would say, leg of the move. Leg of the move. Hourly. Reverse that hourly there. Protect the leg, reverse the hourly. This can't be it. You could interior from here to there, hourly to hourly. This is the range. You can see that this is the range. So you start here. You can see that that's the range. That's like clear as day. That one already reversed, which brings you to here. Backside plus reverse. Origin. You got a second candidation there. Origin to protect the leg of the hourly. Which ladder's here, which can interior. That's smart. Ladder, create that, create interior, create the 4 off of that, text the 4 hour. Like, yep, that's really good. I like that. You kind of have to go through what makes sense, and then you can RA this to see if there's a deeper point. Like, you've got backside here, front side here, also got this there. I would RA this as all one trade from here to here. Develop that as a higher range. Can't be the hourly, it has to be the 4. So if it's the 4, I want enough time to pass. Like, I want more time to pass if we're going to go after the 4. This is just not enough yet. I want more time to pass to protect this 4-hour leg. But you've already got that there, which could be like a little interior trend on a different time frame. So, like, when you ask, minute, good here or not good. So you've already tested this origin. So this is kind of like already done. This origin is already back tested. Like, so this was 15-minute origin level, breaks out. It's what can hold the move up. It also coincides with the backside here. There, you know, this here as a floating level. This is floating level on, I think it was an hourly float, hourly floating level. Wick there, origin here. That fire, this fires on. This is a combination level. It fires on like 5 or 6 levels here. Well, four levels. That's what I can count. Hourly, as well as the origin, the 15 back, the 5, 15 front. No 5, 15 back, 15 front. 2 different parts of the range. 15 back here, 15 front side there. Origin is 3. And then the hourly is 4. So this is like a really strong combination level. That's why it holds up here. So you're kind of here right now. Or you're protecting the leg if more time passes. Protect the leg, you can reverse this and protect that leg. But I would like to see the 4-hour leg reversed. Yeah, you can. I kind of starting to like this. I would RA it. So that's how I would look at this, Matt. You asked about the 15. How I would look at this down here. This starts to make a lot of sense because it already hit this. And in order to hit it again, it would have to create some trends. Those are pretty low angle trends, but they are trends nonetheless. I would wait a little bit to see how much time passes, but I think this looks pretty good here. 44,954 looks decent. You might be able to get a little deeper in the range, and you might want to see where trends can get created here. You know, if you were to touch this, what could it create from here, and then the 4-hour as well? And if it creates a 4-hour trend, like what does that kind of coincide with? Like, where could that be created? Because then you have your 4-hour trend being created somewhere off the test of this point here, right? Like, so if it was to come down to here, a 4-hour trend, right? So what can that protect? What can that represent if that trend is, you know, created in this moment here? You know, what can you go back under to hard close above? So that would be another. I wouldn't lay too much weight into a floating trend that has no, you know, we haven't talked about floating trends yet. That's fine. We will in the future. I wouldn't create a floating trend here, but, you know, I think that's a good way to look at this 15. I think you have to decide what, you know, at a first glance, you start dissecting this 15 down here, and then you start going deeper into the move to say, okay, what's tested, what's happened, and it gives you a clearer picture of, you know, what is already developed here to allow you to understand like what can be tested here. But I think that's pretty decent. I think, you know, you've got this here, and you have an option between protecting the leg of the move, or you have an option to actually hit that next 15-minute level. And then I would, you know, 15-minute here, that's hit already. 15-minute backside's hit, that's hit, that's hit. So do you hold this range here? And if you hold this range, that's going to affect what you do down here. Or is there something deeper on the 5 that you could really sneak after, like down here? I don't know about that. And then that brings you back to here. Like, what is back here? Is there something here that was missed? I don't think so. Is there any other hourlies that we missed? Well, there's this one right here. So that becomes pretty important as well, right? Like, this becomes pretty important as well. Got an hourly here, 15 there. So you got to start RAing between these two. And then I suppose it would start with your RA on this trend, because the trend would set the dump to go down here, right? And this trend is not big enough. This is not a 4-hour trend yet. It's not big enough to be considered. But what happens if you hit here? What happens if you hit there, out here? All of a sudden the RA becomes a little different because that angle of that trend is. What happens if you hit this dive it a little bit down to this point, come back up. So like you go down to here. You just dive the trend a little bit, but then hard close over this backside. And then, can you come down here? And this would, the RA on this would change, because now look how close you are to these levels, and how much would it take to regain this trend? And then did this create a 4-hour trend? So how long did it take to get there? Because is this, is it like this where all of a sudden it's a 4-hour trend, because you have your base here and your reach here becomes a distribution candle as well, and it just deep dives this a little bit, right? So now you have the 4-hour level there. Is the backside one, which brings you to the 15-minute origin, wherever that was in there. I don't know. We found it earlier. Something like. Oh no, the 15-minute origin's down there. My mistake. No, 15-minute there. So then really you're just kind of like here, and you could go deeper in that range down to here. And then is there a leg of the move? It's hitting here. Legs down there. 15-minute legs. So then, could you dive down into the backside of this range a little bit more? This 4-hour range, could you dive down into that? Let's see. Not really. You have the hourly rate here, and there's no 15, right? Like 15. Here. At that point, you're already below some of these other levels. Hourly here. So if you dove the 15, you'd be hitting the hourly anyways. So that would be like a combination backside, front side right there. So then you could hit this. Yeah, you'd really stop here or gap to here, I think. And then does it create a 4, right? So then if it creates a 4 here, could you dive down to here, or even down to this reverse point? Maybe even better yet, yeah, like a little more realistic, I think, would be, instead of hitting that breakout point again, you reverse the level, because this now is starting to make sense. You've tested once, hit the origin breakout, twice, hit the reverse and up. Here you're trended like that. And then this 4-hour trend can be more of like your angled trend like that. That's how I'd look at that 15. I'm starting to like this level a lot more right here. And again, this is also going to depend on how fast this is coming down. Because the faster it comes down, the more I like this level, just because it hasn't created the big enough time frames to make a difference in the chart yet. But the longer this starts to draw out, the more time frames it's going to create out here, or interior trends here are going to break. The more higher trends here are going to start to get compressed and angled down, right? Like you're going to have more stuff like this being compressed and angled down. The longer you go on is less space, right? So time becomes something that we constantly work with to see parts of the move. Next 1 hour is untested. Yeah, that 1 hour there is untested. This one here, it's pretty much a floating level off the origin, right? Like it's a really good target. If it doesn't hold, I like that reverse, but that 1 hour is a floating level. It's pretty decent. 45.2, 15 floating as well at 44.9, 54. In that case where you have a bunch of levels, I just go for of margin, so it's can breathe a little more, because you've got like even this 15 is a really floating level too. Signs of the time bomb, not after the bomb. I think today actually it's important to do a session like this where we just kind of talk about these scenarios. I think this is good. We'll still get into butterfly effects soon. We're gonna take a small break here in a few minutes. I'm gonna get a water. I think throat's getting a little dry, and then we'll go into butterfly effect. But I think this is a good use of our time, going over these scenarios. Finds it in the confines. Well, the time bomb just allows you to see how long you should be in that trade, right? You have to make shields. Remember, the confines of the time bomb is to make the shield. So if you don't make shields, or if you are not developing some type of move, then that time bomb is telling you to get out of that trade. So they act inside of it. The one acts inside of the other. Within the confines of the time bomb, that time bomb has to create shields, right? Like even in this moment, if this was a 10 out of 10, you have to create some kind of shield in that moment, even here, right? Like 6 minutes in a trade, hit this level, 1, 2, 3, 4, 5 minutes, and at least you've created something. So you could stay in that trade, because at least you've created something to decide if this trade has to go. 1, 2, 3, 4, 1, 2, 3, 4, 5. 5 candles in, and you just snuck in there and just made it, right? So no matter what, the time bomb is also always giving you your amount of time that you're allotted to be in the trade. And if we are into 3-minute shields, after you hit say a 7 out of 10, I'll have time for the time bomb. Maybe the answer. So you're entering a shield in that scenario. You've got a 7 out of 10 is right here. So this is your 7 out of 10 is this guy right here, right? So that's your 7 out of 10. So that's the kind of overarching piece where you're saying that 7 out of 10 would be, that's 1, that's 10, 9, 8, 7, right? You're saying that you can allow this a good amount of time to develop because you understand there's a lot of levels below it. So you're entering this right here as a shield. And the 7 out of 10 is telling you that you have to let this to have time to develop because that's what's going to be the trade. So your time is still in play if that's your question. Like the 7 out of 10 is still in play. You'd still allot this a good amount of. So we're looking at this move, and we're just going to do a quick little recap for the video so you guys have this for the future. Accumulation to accumulation on the monthly time frame right now. Just going to bring up my other windows here. A second. Nope, this is for renderings and all that stuff. Get this one on my other screen, on my jargon of levels. Okay, hold on 1 second here. Okay, so you're gonna looking at this move here. You know, kind of like what is happening here? What's happening today? What's happening tomorrow? What's happening for the small foreseeable future? Accumulation to accumulation candle, right? So you're going to start with this on the highest time frame here, the month. Obviously, we don't have a 12 month. You'd have 5 candles or whatever Bitcoin has, like 10 candles or something. Not even. You have 4 candles since it's been charted, maybe 10 since inception. Yeah, 10 years, almost. Yeah. Okay. So anyways, we have accumulation to accumulation, looking to see if this thing is breaking a larger move, right? So all things equal, we can do that same thing on the bottom side there. Fine. Presumably going back to deep dive the base of this move again, right here, right? The base of the valley. It's actually right here on the non-XBT charts, the actual real charts. It's actually right there. So that's fine, but we can use this. We can use the point that's already there, looking to go and reestablish that base of the move again, possibly, or just at least come down to some kind of in-between ladder point, something else in here. You know, we've talked about this a million times. Some level down here, whatever, that's fine. So you're looking at this move and you're wondering, you're at trend here and you're wondering, okay, how do you approach this? So you first have to start by looking at what's been happening in the move, right? So, we have some kind of level here. I'm not really sure what it is, but anyways, it's there. I believe it's a daily level. This is the base of a move that was created on a different time frame. So here's the base of the move that was constantly hit. So we're just going to label this base, this base or base of the move, right? So there's the base of the move on this side. This possibly just a hold level that's creating another base. So just hold level, possible base in the future, right? So you've got something like this, hold level, possible base in the future. The reason why I don't want to call it a base yet is because it's only actually kind of come and hit it once here, even though this is kind of a second touch, but I'd like to see a few candle separation here before it comes and hits it again, just because it might be something on the larger time frame, or this is actually the base of a move on a smaller time frame. So you're either trying to create the base on a larger time frame, or you're trying to create it on a smaller time frame, right? So you've got a few different regions where this can profit cap. So technically, the profit cap could be here. The profit cap could also technically be here like this, or it could also be here like this. Well, it wouldn't be here, right? Because really you're looking to see if this base of the move breaks here. So your profit cap right now is somewhere in this move like this, right? You're something like this, but we're not quite certain yet. It also could possibly be like that. It also could possibly just be to this little level right here, right? So you've got a few different areas. So you have to start looking at this thing and analyzing what it's done in the past here, right? So you have greediest level here, gets hit perfectly, right? Weekly greediest comes back, hasn't tested this yet. Actually, it has. Weekly greediest gets hit there. Weekly greediest is being hit here, right? There's no weekly greediest point here. It's actually down here, right? So you could even say, oh, maybe we're going down to here, this 36.49, which actually was hit already. This holds the move there, bounces it off. This was actually already hit here.
on the other exchanges, that's fine. So we can use that there. All things are equal. We're going to start by taking a new level here and putting it right here, weekly greediest point there, and it's being tested and tested and tested. So obviously it's going to see if it's going to a different range here or breaking trend. So you have to start going down in time frames here, and why we always start working from one side of the chart down, right? So we're going to go to our next time frame and see where these levels exist, right? So you have the daily here, that's already tested. So you'd be down in this region here, and that's already tested. So you guys know all that stuff. We can kind of just walk through. This daily here has been tested in the past. So this is kind of the first important piece of information here, right? We can look at this, and this is the kind of the first important piece of information. It was the daily that was tested here, right? So you see the daily's tested, comes straight up, pulls back. It's going to go after the largest time frame. So for example, if you had a daily right here, it's going to pull back off that, right? You're not always necessarily going to go to the 1 minute candle, but sometimes you do have that confluence where the daily and the 1 minute candle just happen to coexist, right? So you do have this right here, which hits the daily. We don't have a daily level down here. If we were to have a daily level, it would be right here, right? So you would actually have to just take this and pull it right here. We don't have that daily level. That would have been a perfectly fine short here and all these things. Biggest time frame, yeah, great, 4%. That's very cool. But we don't have that. So how do you have to approach this level? Well, you have to start dissecting down its time frame. There's no 12-hour level there. There's simply no 12-hour level. So we can't set any level in this range yet. So this range right here, we can't set any level inside of here because we simply don't have one. We don't have anything on the daily because that daily's down here. Well, we actually did, but the daily got hit, right? The daily got hit, so the backside gets hit. So presumably it's going after the front side, but there is no front side. So you just have to constantly keep working down in time frames. So you do have something there. You have a 6-hour, which also ends up being another time frame. The 6-hour is not something I typically use, but anyways, you can see there's the important piece of information here is there's no level setting to be had here. You're not setting any levels there. The level's being set here, and you're finding it in the profit cap based on working from the top time frame down, right? So then again, you're right here in the move, and you do have that 4-hour level. So you can start to identify where this move can actually go, right? So this is the most likely outcome here, 96.23. There's nothing left in there. What could possibly stop it prior to getting to there? Well, you have a 2-hour here, which I don't really think is going to do anything. The 2-hour candles don't do anything, but you do have a 1-hour. So you do have a 1-hour right here. So this could cause a pullback, nice percent, maybe 2%. But ultimately going to that 4-hour level is the goal, right? That 96.23 level. So ultimately that's the goal. And this is something we do called level setting. So it's very much a process that we've already done. We're just giving a more defined criteria to it, a more specific set of rules when we're looking for these larger trades. So we've got a few things to factor here. We've got the fact that the monthly, our monthly trend is trying to break and hold this move. So just like it, very much holds the move here, although this is trend creation, it has its pullback. If this continues to hold the move, you know what happens with trend continuously brings it in the direction. You either break trend and go up to some other range, or you use trend to go and attack the other side, right? So we know this is a very polarized trend. It's just about catching the right level, right? So have to start identifying what could possibly be the right level. While we're at trend, so I don't think we're going to snap over too hard. I think we've already done that here. I think we've already snapped over this trend once. So if you're in this move,
At this point, it would be more about the range on the bottom side continuing to hold, like interior range. More importantly is that bottom side trend. Quick note
here, for example, and you're right here and you're saying, oh, where could this go? Yeah, I mean, you've already tested your biggest level here. You've got a weekly that you've already tested twice. So where could this thing go? Yeah, well, it can go to the base of a move, but it doesn't necessarily mean it's going to snap over top of trend, right? So you've already hit your biggest time frame. Like you've already set your level here.
a really important thing to know is base of the move here. What I'm presuming is lower time frame origin. These moments back here,
And that
these moments back in here, you have a lot of room to not worried about breaking trend. The more time that goes on, just like we talked about today, the more time that goes on, you hit that base of the move, and you're starting to hard close over trend. At that point, you'd have to have some pretty radical pullbacks, but at that point, hitting the base of this move breaks this interior ladder where your level is set. So
that is holding the move down as kind of the base of your move. So when you're looking at this, sure, it can go after the base of the move, but it's not going to break trend on that, right? Like it's just not going to happen. Okay, replay tools cooked. We're just going to turn it off. It's not working. But when we're looking at this now, I don't really think you can use these levels to propel you to the base of the move again, because at that point, if you're all the way at the base of this move, unless you go up $1,000, which is 10%, and then drop another like 1,400 to bring you back down to here, you're simply just breaking the trend, because you're not going to come up here and knife catch it down. Like I'm presumably this happened in one day. Yeah, and this big knife catch happens in one day. It goes straight up to the base of the move and falls straight down. So you've got kind of this 10% swing here in the move. You've already done that. You've already done that on this trend, and you're too far away to do that again. So that starts to bring you into, well, where can it possibly go? Well, okay, it could possibly go to the base of the move here. Very doubtful, because it would have to go up 5% to fall down. You very, very doubtful, but could it do it? Sure, it could. A lot less likely though. I guess we're pretty early in the month still. So yeah, okay, we're only on the 8th. That's the first thing I did, is check the time, what date of the month it is. So if, being that this trend is created on the monthly, yeah, okay, fine. You could fall into a criteria where you go up to here, possibly even up to here, and then fall back. But it would be tough, because you'd start breaking up into your trends. More so right now, you're just looking to see if this ladder can hold, right? So then, you have to consider all these things when you're looking at these bigger moves like this, because this is possibly feeling the next big move, right? Like you're right against it here on either side. You're either going to be holding this trend and breaking up, or it's time to start pulling back, because the trend is just going to hold. And it does look more like the ladder there between the two, where it's starting to hold the trend, and you are pulling back, right? So then you just have to start looking at this move and doing level setting, which is setting the proper levels, and by going and first identifying your biggest trend, right? And this is what we do in these
a lot of what we've been
key
doing
moments. So
recently.
right now, important to understand, right now is a
Not to
key
like
moment
Vivid.
for Bitcoin, right? for any stock faced with this scenario, it's a
I
key
forget to like
moment
them
where
all.
you
I've
have
gone through every single
your
mentorship
biggest
lesson making these bids. But so this level setting is a lot of what we've been talking about in the past 2 months, about selecting the right levels and risk assessment. And that's really where you start to get to the end of butterfly effect 1, and you start seeing where identifying the proper levels and then building on top of that architecture becomes important with risk assessment. So RA, doing your assessing the risk there, that's really where it becomes important. And level setting breaks into that. So important. It's good to see what the version of what we've been doing looks like before we introduced risk, and just like a more simplified version of picking levels and trends and how they interact. Right?
trend ever created kind of being tested in either direction for the first time, right? So
Bit of a history lesson today, I suppose.
You have that accumulation to accumulation point, just like you had this distribution to distribution point from here to here, right? So, when this trend gets tested, you've got to see what it's willing to do before it has a big move the other way, right? So, yeah, okay, fine. We can actually say it can maybe go to the base of the move. Again, less likely, but it can. Yeah, well, we're only on the 8th of the month, so you've got another about 50 days or so before that decision is made. You could slightly go over and then fall straight down, right? And we do this level setting by going the highest time frame down. So you could go to 10.9 here before you fall down, because this is the next untested piece, right? Like this is tested here, this 10.9 is tested here. This here is clearly not usable. This one here we're already using on the weekly. So you have an untested weekly here at 10.9, or not an untested weekly, but possibly something that can be created longer time.
Pretty easy to see where this move is broken once you start going after those levels that were set here. 9916, or 9,916, it looks like, how that would be breaking the trend. By testing that level, you'd be breaking the trend.
Do you have anything on the monthly? No, obviously
or
we wouldn't have
close to it, depending on what had happened in that moment. I mean, we're looking at monthly
So 10.9, yeah, okay,
calendar
fine.
here, so it'd be a little tough to say, but
could test again for sure. But
not
again,
really.
It's already laddering. You can see the progression of the ladder from here to here.
You're gonna break the trend,
here
and that trend is gonna break the level, and then it all snaps.
Again, less likely to break this move up for all these things considered. We set our level by going to the highest time frame down and seeing where that can possibly be. So we need to go into the charts here a bit more. We've got the weekly back here. That's fine. This weekly's been hit over and over and over. This daily has been hit. We have no dailies left thereafter, right? Like we don't have any dailies after this. So you have the daily here, it's hit perfectly fine. There is no daily after. So what do? You have a 12-hour? No, you don't have a 12-hour. You have a 4-hour? No, you have a 6-hour and a 4-hour. So the 4-hour is where it could possibly go, right? Like to me right now, this is kind of the top of the move. Yeah, I don't think you can go back up to these regions up here. You've already tested this range. You've tested this range. At that point, you're starting to move up. At that point, where if you're going to be testing this level, you're likely starting to move back up to this 10-9 level to test that again. You have two decisions to make here. Do you think it's going to ladder? Yes or no? And if it's going to ladder, you have to decide what the total piece of that move can be. Like you can see that it can't be up here. This is already tested. Yeah, okay, it could possibly be here. So let's talk about this level. It could possibly be here, but at the same time, then it's kind of invalidating this ladder that's been happening since the beginning of the month, right? Or the beginning of last month here, almost a month now. It's created this ladder from here to here to here to here. So you have to, okay, is it laddering? Yes. Which levels is it laddering off of? So when you look at this and you're on a 4-hour chart here, again, go back to the daily and say, okay, well, what has laddered it? There's nothing there. There's nothing in the weekly. So the daily has laddered it here, right? Back to the weekly. Base of the move, ladder point. There's no weekly left, right? And again, why we always work down in time frame, because this is the problem you're going to run into. So you find the daily right there, go down in time frames, start working through your time frames. That's the daily. Here's the 4-hour. Here's your next big point in this.
You would look at this and you would say, what is the risk here of hitting that 4-hour level, as to where, you do have a floating level here that you have to pass. You do have this here. Pass. Don't believe that's a time. You have a floating here. This here. You have this here. But once you start breaking over top of this trend, you're going to start developing the higher time frames. So maybe this first 4-hour level at 96.21 isn't an immediate threat, because it can hit that and I could see it pulling back. But if it hits that and starts lingering around there, you can obviously see the events that are going to follow through thereafter, right? Like this trend being broken. It tried to break here, but it fell back. But hit this level and hold over this trend long enough. I think a few days would be enough, right? Like a few days, that trend would be breaking.
This trade. So you only have kind of two decisions to make. If you think it's laddering, you now have a decision between this level and this level. And simply put, this 95.09 level is just working down to the next time frame to see where the range of this move could possibly go.
Yeah,
right here,
I agree with that.
This is that next level, 95.
It probably already hit that
right?
back.
So those are the two pieces of your
It already hit
where
that
can it go?
backside.
Is it breaking over
You
trend?
can't use
this
this anymore.
Pullback, or is it breaking over trend and hitting this?
That range is
pullback? A lot of this is going to be chart architecture in the moment.
You could RA
how
it
much
down
volume
to a
comes in.
point, but that
You're likely in this stage of the move
higher level,
where you are seeing if this level of trend can break. You're likely going to see a massive amount of volume. So that's going to be kind of your first tip off, is in the moment when you're trading this, are you seeing?
And just a quick note about this. Because this laddered the move here, this would be where you have to start looking to setting your levels, right? Like level setting. The very basic form of R8, like level setting, is what you would do to introduce people into R8, like setting levels and which ones are important, right? So, just then, looking back again, this is a bit more of a history lesson today, because we've gone so much further beyond this level setting. But this, possible origin point, if it rejects this, would also give you where your hard close in this criteria would need to be.
2,000 Bitcoin distribute a 1 minute candle, or are you seeing 10 or 20,000? Because you possibly up to 50,000, because you could see a 1 minute candle with 50,000 Bitcoin distribute in a moment like this, right?
Or alternatively, accumulate.
Zoom into.
You could see this be a trigger for shorts, long-term shorts up at 20K,
maybe
15K. The ladder point prior
for a quick second.
Inverse levels. They're all.
So we have to go to the USDT chart.
Yeah, let's skip this little. Be looking for the volume garbage.
Fine.
It's not important. Just talk about how you could see the candles there. Like, oh my God, you see a trend and then there's big volume. Well, that's because they're trigger points, or they're
using Binance. So you're gonna likely see on
That's
that type of
not
level. And
just going through like volume stuff there now.
in the moment when you're looking at these two levels and you're saying, okay, well, which is it going to go after? Is it going to go after the 4-hour profit cap, right? Or is it going to go after the 1-hour level and ladder the move? Well, it's likely going after the 4-hour because it's the next biggest time frame down. However, in the past here, it was the 1-hour that laddered this move. Like you can see it right here. It was the 1-hour right here that laddered this move. So you can ladder off a 1-hour as to where the 4-hour in this moment would have been all the way up here. Good $100 difference, almost $83. Yeah, we've got a good $100 here as well. So which level are you going to go after? This is, you can only tell in the moment. This is not something we can see right now and say, oh, we're going after this level, we're going after this level. Presumably we're going after the 4-hour, but if the 1-hour is going to stop it, it's going to be off of that. If this was just a 15-minute candle and a 15-minute level, I wouldn't even look twice at it. You probably have those in here. So just mark this one, for example. You know what? Mark this one, for example. Here's an untested 15-minute level. These are great for scalps and all that, but like, there's nothing even there. It just moves right through it. It probably stops for maybe like a 1-minute candle and moves right through it. Yeah, it doesn't even really stop. It just moves right through it. And yeah, again, you're working from the wrong side of the chart, right? So when you're defining kind of this important moment like this, right? And draw your, okay, of course we don't have it here because it's Binance and they don't have the information. But when you're looking at this, you have to work from the highest time frame down and see where these ladder points exist, right? Like even here, the weekly, back here, recreate those, right? We create the weekly, go to the daily, recreate the daily. And this is not how we scalp. This is not how we swing trade. This is more position trading. We're trying to find the bigger piece of the move, right? Trying to find the more notable spots where this is going to take a large move down, 10% or more, because it's coming close to that. And we obviously see it on the XBT chart. And we simply have nothing here. So we have to level set by going down in time frames. And then we're left with this here. And we can pretty much delete everything else on the chart. Like this is already tested. This is a weekly range. You'd possibly be here, but very doubtful. You've kind of already created this. Could be a 12-hour maybe. Yeah, you've already laddered off that. You've already laddered here. You've already laddered there. And that's like a big key to it, right? Like you've already laddered off these levels to create this. Let's go back to XBT. We had our levels here. Take a look at this. Why is this on the left? We want to go do this on the right. Top right. Okay, there we go. Again, nothing on the 4-hour up to here. So this is the profit cap of the move right now. This is where it's most.
The profit cap of the move, yes, it is. If you're talking about range to range, that's your profit cap. There could be a little bit of a deeper spot, but really hard closing that would be your profit cap. So that's a great take profit if it's going short. I mean, that's a huge amount of money. Is like 8% of a move. That a few $100s there is 800%. So yeah,
most likely
a big move,
the biggest pullback. But you can't rule out a level higher just due to the fact that we are at a monthly trend right now. And when you come up on these monthly trends and these larger weekly trends and monthly trends, you're not necessarily going to stop by that trend, as you can see here. Rather, you're going to use the trend to ladder. Like if you were to think these are 1-minute candles, right? Think of these as a 1-minute candle. We'll go find an example. This is exactly what it looks like, except we're on the largest time frame here. So there is no more. Fall through and adapt this trend. There is none of that. That's simply not there. At that point, you're moving up in the range or down. But if these were 1-minute candles, that's the process you would do. Is you would wait for it to break down, and then you'd adapt trend like that to this point here, and so forth and so forth. But you're not like, that's a huge move right now. That's if you're going to adapt to the next point, it's 15%. So an adaptation point here where it's possibly swinging or making a new hard close. That's a big difference right now. So, but this is exactly what it would do, right? Like it would just use this and it ladders here to here to here to here to here. So here, 3, 4, 5, 6 ladders. So you have to kind of see this as the base of the move is the final of the move, right? Like that's it's already laddered to this point. This is 6 ladders going back, or if you know, the first, the second, the third, the fourth, the fifth, it's already laddered 6 times, and that's the base of the move. It's already done that 6 times ladder. If you break over this level, you like the move is gone, right? So you have to be mindful of that the ladder has to exist somewhere. So you can even take this out. It has to exist from this point down. So it has to exist from here down. So what we can do is we can mark this, and then, you know, we can flip our chart back. It's that level there, and we can start going to see where the ladder is developed. Obviously nothing on the weekly. Okay, we do have the daily, so let's delete everything else. Let's now just go through this and delete everything that we haven't done yet, right? Here, you delete all this stuff. We can use this as the base of the move on the bottom side. That's fine. So we actually do have the daily now, which is here. So we're just, for this example, going to turn this red, as we always would do with the daily level. We use red. No, that's the text. We don't want the text. We want the actual candle. Yeah, that's good. You have no more level setting to do right here. It doesn't exist. There is no more level setting to be done. You have to move down in time frame, right? Here, that's it. You're right there. And if this 4 hour is going to be attacked, guess what it has to do first? It has to go after this level. Do like a peach color for that one, like we always do. Right. So when you're setting these levels, and again, this is relevant right now to this move because of the events leading up to it, because of the fact that it's a very big trend. So you have to kind of consider all moving parts of this move, right? Like you're having to build out the entire piece of this move to say, okay, is this thing breaking up or down, right? And so you're really only left with 2 levels. And if you go back to your first question, do you think it's still laddering? Okay, well, let's go to the weekly and take a look at this for a second. Why wouldn't it be laddering is what I would first ask, right? Like if you're gonna, you know, flip this thing again, and like, why would you assume it's not laddering anymore? That's the first thing I would say. Like, what makes you think it's not laddering? Because I don't see any points in this chart where I could say, oh, it's not laddering anymore.
The only cause where you could say that maybe this is starting to break its ladder is when you see this right here and you test below it to start to create an origin. Yeah, a moment where the ladder becomes an origin point, and then that's confirmed again, right? And then this base of the move really becomes your, you know, your breakout. The base of the move is really the origin of the move there. That would be where you could see it. And then it would need to go, and it would need to ladder this part of the move on against the bigger pieces, right? Like it's almost too local compared to this. It would need to go for more global, not a legacy, more of a globalized piece. Again, today's more, this is more of a history lesson because
it has
gone over this in
never
such a great
broken
depth.
a candle from the past one time, except when it created the base of the move, which is here, which is fine. That's still holding the base of the move. And this is why the base of the move is the base of the move, because it's the first point that tries to break the ladder back, right? So you have the base of the move, have it hit here, which is a ladder off of this, which is a ladder off of this, and that's fine. So 1, 2, you could even say 3, 4, 5, 6 right there.
Yeah,
6
exactly.
and the base of the move, right? So identifying the base of a move, and part of how you can identify the base of a move. Where's that point where it breaks its own ladder back? So that's one dead giveaway for bases of moves. That's a pretty good tip for you guys. Is when you see
base or origin,
you know,
and it can be read as either way.
Ladder. All of a sudden, it goes and breaks that, and it says, "Oh, we're no longer laddering." Okay, that creates the base of a move, right? Where you start to back test that level and actually go below the ladder point. But this is just a longer term ladder, anyways. But that creates the base of the move. So that's polarity, right? So base of the move,
super polarized part of the move.
Add a little bit of text to this base of the move. We could do the same thing on this side of the chart, and you know, see the larger time frames down. We haven't created a base yet on this move. We're probably, if we could do it, we could do it off of this level by going above it a little bit and then creating that as the base of the move.
Don't believe you can do it from back here, because I think that's a ladder.
You don't have one created here.
If I remember correctly.
That pulls back off of this. That pulls back off of this. You actually haven't. Well, you have. It's just not on this chart. You have to go BXBT or BXBT, whatever it is. BXBT. 39. Yeah, because BitMEX froze, so it's actually not even. XBT USD. No, that's not going to show it, is it? Oh, it actually does. Okay, perfect. It doesn't actually show it to the right level. Yeah, it does. It actually does show it to the right level. It's actually perfect, right? You go to the top of the move range. You could actually create a base here. I don't think you've created one anywhere else. Actually, I haven't looked, but no, you haven't. But you could go and create this base here, ladder off of something here to eventually go a little bit here, and then create the base of the move here against that 10K. So you could, what's something that can happen in the future? Sure, you could be stuck in between that range of two bases of the move, which is just a larger Pandora's box. But anyways, getting back to XBT here, that's how you would identify the base of the move, right? We just really wanted to see if this was tested on BitMEX, which it was. It just, you have to use the right chart to see it on BitMEX, their futures contracts or whatever. One, that creates a base of the move. There is no reason to think this thing is still is no longer laddering down, right? Like there's nothing here. It's still laddering larger time frame. 1, 2, 3, 4, 5, 6, and now it's laddering off of this range here. So now you're in this moment here, and you're looking for that inner polarity, right? Like, okay, so let's keep this upside down.
Then enough
for a
time
moment,
passes, you've
and
got
we're gonna
higher
start
time
breaking
frame
down
ladders.
time
This
frames.
actually
Okay,
valid still.
daily is hit. We have no daily here. There is no daily here. So if we were to actually put a daily there, we can for momentarily just to say, okay, it's probably here on a different time frame, something much smaller. Go here. Take a look at this. Ah, voila. Oh, all right. We have a 4-hour level. It's so perfect. It's actually hidden. So yeah, this is where the move can go. And in order for it to get there, it has to test this to see if this can pull it back and see if this can hold the move. So, maximum profit cap. If this breaks, you're likely going to go after the base of the move. I guess you do have one more stop right here. You could stop right here, but you wouldn't assume it would be stopping there. This is more the level of polarity here, because at that point it's already broken the move.
Yeah.
And you'd either be developing a base, or you would be you'd either be developing the base of a move on an already tested level. So possibly this level daily here, you could go here and make that a base to test that untested level. And so you have all your stops, right? Like all your shorts, all your shorts.
And this is the introduction into reverse levels, which we get into in the coming lessons.
97.78. Possibly a future base. That's what you could say. Possibly a future base question mark. You could say this would possibly be a future base if you break over top of this level and this level, right? But those are your important moments and how you set your levels properly. So this is, when you're looking at chart architecture and trying to pick the right levels between these things, this is called level setting, right? And how you find the base of a move is when a ladder back breaks and it goes after that same hold. Well, it's going to go after that same hold, but a ladder back breaks and that hold level holds. That's how you see it happening, right? Yeah, I think just a really, really solid top-down lesson on what could possibly be happening, not only today, but in the near future here for Bitcoin. The one thing as to why I would say, because immediately seeing this, like if this wasn't here, if that wasn't there, I would immediately assume that this is going to create another base of the move here at 9,700. Because we have such a massive trend here, I don't see how you can go after this base unless you fall straight down. Like, possible scenarios: go to the hourly, pull back, and it ladders. Good scenario. I think there's a good short to be had there. Now, whether you should hold that short or not, I think that decision is made in the moment. Another scenario here is you hit that hourly, you kind of do something, pull back, go up straight to the 4-hour, and then have a big pullback, confirming the long-term ladder down, confirming the rejection of this trend.
This was a good
Another
history lesson
scenario
today.
is you kind of go straight up through these levels, hit the daily, and have a much bigger pullback. This being the massive pullback that would happen. Almost the same thing that happens here, right? Like just a huge.
You'd really have to justify a reverse level in that moment.
Maybe not
be able
that
to
big.
hit that.
I don't think it would be that big. I think you're more looking to go after, maybe to this level. I don't think you're gonna go here and fall straight down. I think obviously you've got some stops on the way down here, but that's another scenario here that could happen. And I think that's it. I don't think you have anything else. I think once you start going after these higher levels, you've already broken this base. You've closed the weekly. I think too long on this side of the trend is not good for shorts, right? Too long on this side of the trend means that, the higher the level you're going after, the quicker it has to move down. Otherwise, it's just going to, over time, hard close over this trend, which, as you can see, it hasn't done that at all, like ever on this chart, not even a single day. Maybe like half a day. Maybe there's like a 12-hour candle. There's no single one daily candle. So there's kind of a disparity here between levels. So the faster this thing raises, the faster it's going to fall. And if it holds, well, you're going to be the first time breaking over this legacy trend on a daily hard close, right? So then you have to kind of see, is it going to continue to hold? And does that set up the weekly next week, right? Do we hold that level throughout Sunday? And then, so Sunday, you've got a candle that could possibly in another 7 days open a new.
Boy, did that ever come to fruition,
right?
that fall.
That's pretty important to realize that, it can only go so far before it has to have a big pullback, right? And without, the higher it goes, without a massive pullback, the less likely it is it's going to move down, right? So,
hey, today was more of a history lesson than anything, which is okay. We've done so much work on risk assessment and stuff like that. So I'm going to leave the risk assessment videos up from last month because I looked at how much work we actually did last month, and it was like obnoxious. There's 31 days in the month, and we had 14 lessons. I believe the final count was 14 or 15. It was a stupid amount of work that we did last month. So I am going to leave those videos up for a little bit because I think people should review that as much as they possibly can, as much as they can. So let's talk about that and this month's schedule here. It's the second of the month, very beginning of the month. This month is all about career setting. So we are setting everybody's, I don't want to say I want to say we are setting up the path to start putting people into their career. I think a lot of people have been in mentorship for a while now, and there's a lot of people who I can see ready for that. So this next month, and it's probably going to be, so the schedule was going to be so that we start Butterfly Effect 2 this month, which means I have to record it this month, which I'm ready to record it, but I also don't want to rush career building month. So we're going to have some kind of bit of a, like I said last time, 2-week window where we are either going to start Butterfly Mentorship halfway through this or halfway through next month. We're going to say at the end of April, kind of a 2-week levy on us. So starting Monday, we're going to be getting together, and I'm going to post up the schedule today. I'm going to be working on it for 2 hours today to get a really good schedule up for us. That's going to go straight from career building and finding as many spots as we can to kind of make up for that, which is going to allow them to segment into teams and all these other things that are going on. So it's just like a really solid schedule right now. I think with as heavy as this month is going to be, I could expect it to be as heavy as last month, if not heavier. But also at the same time, I want to leave last month's stuff up for a little bit longer because I know it was just such a valuable month, the risk assessment, the stuff we did on risk assessment. So that I'm just going to leave up for a little bit. I was planning on taking it down on the 4th or the 3rd here, like give people a few days, but I'm just going to leave it up for as long as I can before I have to take it down because we have like a new member joining who hasn't prior. So as soon as a new member joins, unfortunately, I have to take it down, but I will keep it up as long as I possibly can so people can study it. Because again, we had 14 lessons and it is just such a massive amount of it. It's hard to even comprehend how much, like it was like 3 or 4 months of mentorship in 1 month. It was pretty intense. Or at least 2 months. I can say for a minimum, it was at least 2 months of mentorship in 1 month because I've really been trying to push through, get to this career building month. So with that said, that stuff's going to stay up. There's going to be new replays for everybody. So today I'm going to be working on getting the replays up for Butterfly Effect lesson. I believe we're on in the 20 to 30s for the people who haven't seen the earlier one. So you're going to have the 20 to 30s up. So I'm going to be adding another 10 lessons or so, or whatever it is that is the next queue for the mentorship lessons. I just have to go and edit them all and render them all. So it does take a bit of time. And then we're going to be getting together in the morning times throughout the week to do like a career building session. And then Naya's going to be working with us as well as I'm going to be working with us. And we're going to have a couple different things. You could do kind of like a soft trial for teams as well during the mentorship. We're going to have a couple different group channels where we go into, and people are going to be different, paces, and we're going to look for different opportunities in the market. So this month's going to be really exciting. It's going to lead straight into Butterfly Effect 2. Likely next month, I want to say, way heavier on the cautious side and say likely butterfly effect Tuesday next month and this month, but there's still a possibility. We're almost done butterfly effect 1 now, so we're on lesson 68, and then I believe the last set of lessons is reverse levels, which we've gone over quite in depth. Like if I go back and look at the schedule of lessons here, let's look, what do we have left here? Can't be that much. We're pretty deep. But we've got, we did level setting, which is more of events is next. Events is going to be really good. Events, and then risk assessed moves obviously just works right into RA, and then reverse level. So we will likely be able to finish all of butterfly effect this month. Looking at this, we still have quite a bit. We have up to lesson 75, so we have 3, 4, 5, 6, 7, 8 lessons. So we will get through 8 lessons this month. We're there, as well as doing the career building, as well as working on RA. We need those RA videos up as long as possible. So this month is going to be very crazy as well, like last month. The date today, the 2nd. So our first event will be on the 4th. Yeah, April 4th. Nice easy lesson today after a month of just intense work. Nice easy lesson today. Dax says shield is the amount of time you have to develop a level from the session. In other words, say you test an 8 out of 10. Develop. Break a 1 minute shoot. That means yes. So the time bomb is the amount of time you can no longer stay in the trade. Don't look at the time bomb as the justification DAC to say I have to stay in this trade for 1 hour minimum. Rather say if something hasn't developed on that time bomb, I need to get out of the trade. Right? So if you remember back to the beginning of the time bomb lessons, the most important thing is your 9 and 10, and then the 8 and 7 are important, but they become less important to see because it becomes very clear in the move once you get pretty good with risk assessment. Say the 8, for example, would be your 1 hour time. By 1 hour, you have at least 5 minute shields up, 15-minute shields. It becomes less important for the 1 hour and the 4 hours, so the 7 and the 8. It becomes less important for those, for that simple fact that you already have your shields developed, so it doesn't have to be as hard of a criteria to say. More importantly is that 9 and 10, because that is telling you where you can no longer be in that trade safely. So say you have a 10 out of 10, for example, right? And your 10 out of 10 hits and nothing develops in the first 6 minutes. You haven't gotten any hold levels, and you're being liberal because you really think it's polarized, and you're saying like, oh wow, this is like really, there's nothing left after this. So you're being liberal. So you're going 3 to 6 minutes, but you're going to err on the side of caution and go 6 minutes. You even want to break the rules a little bit, be a bad boy and say, okay, I'm going to go 7 minutes. This is getting, like, wow, 7 minutes, dude, you're a madman. Do you even break the rules a little bit? Go 1 minute plus, give it a 1 minute plus, you 7 minutes. You're 10 out of 10. You haven't developed the shield even on the 1 minute, and it's been, or 3 minutes or a 5 minute, and it's been 7 minutes. You have to get out of that trade. The risk is too high. So the time bomb tells you not how long you should be in a trade, but at what point you can no longer stay in that trade. Right? So it's kind of almost irrelevant. Like when you say the time bomb, like, oh, I've got 5 minutes to develop this. I've already developed the move, so 5 minutes. Okay, 5 minutes have passed. No, it has to create a shield. And if it doesn't, you have to get out. So it's not the fact that it gives you the amount of time you should be in the trade. It gives you the amount of time you can no longer stay in the trade if a shield hasn't developed. You see what I mean? And then same with your 9 out of 10. Your 9 out of 10 is telling you like, okay, You've got 15 minutes, so you've got kind of got this 5 to 10 minute levy on either side. So you've got like 25 minutes or as low as 5 minutes, so somewhere bridging between that 5-minute mark to that 15-minute mark, but more so saying 15 to 25 minutes, somewhere in there. By 25 minutes, if you're on a 9 out of 10, by 25 minutes or 20 minutes, if you haven't by that time created a meaningful shield, regardless if it looks good or not, you have to get out of that trade. So it gives you the amount of time, and that's really where the 9 and 10 of the time bomb becomes so important. But it's not to say that you don't do RA on every level, right? It's not to say you don't do risk assessment on every single level and that the other ones aren't important as well. But what it is to say is that, remember, like your time bomb, if this was a 10 out of 10, right? If this was 10 out of 10, I just hit cancel, didn't I? Hold on. This was a 10 out of 10. Remember, that is telling you that, let's say this is a 10 out of 10. If you haven't developed anything and you're sitting here for 6 minutes, regardless, you need to be out of this trade. You have to at least develop some kind of little thing that you could have as a shield, because after that, it's almost like this moves up to that point there, right? And says, okay, well, you've got that there. You have to, you have to stay over top of that shield. So again, the time bomb is to allow you to understand there's two hemispheres of a trade, right? Or there's two parts of a trade: pre-event and post-event. So time bomb allows you to understand how long you should be in the trade before you enter the trade, so that when that trade hits and you're in post-event data, this side, right? When you're in post-event data, you know you've only got 5 or 6 minutes to be in there. And if it hasn't developed something in that post-event data, if you haven't developed that post-event data, then you have to get out of that trade. The risk is too high. Alternatively, this was a 9 out of 10. It's telling you that you've got, 15, 20 minutes. And what happened there? 9 out of 10. I don't know what happened. So if you've got this here, it's telling you you've got somewhere between, I would say 10. I wouldn't say as low as 5. I'd say 10 to 25 minutes. On this side of the trade, once that executes here, you have 10 to 25 minutes. And if you can't develop that trade in 10 to 25 minutes, like, you need to be out just because the risk is becoming too high. You need to be able to develop a shield so you can just kind of go like this and say, okay, we no longer need to concern ourselves about the time bomb because actually we have a shield in the trade that can hold us up. So yeah, again, I wouldn't look at it as, don't go to this, for example, right? And the other time frames are important. Let's not downplay the other time frames. Like here is a 10 out of 4 with a 7 out of 10, right? As a subcategory is a 7 out of 10. So 7 out of 10 should be, this is 10, 9, 8, 7. So 7 is your 4-hour charts. So you need a couple 4-hour candles, right? The next time frame will be the 12 or the daily. So you need at least a minimum of three 4-hour candles to make that happen. Or in our case, where it's a daily, you need at least 6 candles to make that 7 out of 10 be, if you haven't developed something meaningful. So go here, for example. We're right here in the move. And, if you haven't developed something meaningful, 1, 2, 3, 4, 5, 6, by this candle here. So you can say, you can even take it to this candle here. If you haven't developed something meaningful, you could even do 12 hours, right? You could do 12 hours like this. If you haven't developed something meaningful in this first 12 hours, you need to be out of this trade, because it means you never created the shield in the trade that you needed to hold this thing down. And, in this scenario, a 15-minute is fine, and then it creates a 15-minute backside, or, whatever. We've gone through this trade. We don't need to go through it again. But, 7 out of 10, you still have to have, you hit your 7 out of 10, you still have to have something develop, regardless. So if you had never pulled back, so let's go like this. If you had hit that level and never really developed anything and just kind of lingered around here, you've got to get out of this trade. You've got to get out, because this time bomb has told you, like, enough time has passed and you haven't developed any meaningful shields. Your trends are going to start breaking, and then it's just going to rip the other way. So it's not to say that 7, you're 6, you're 5. It's not to say those time frames aren't important, because you've seen daily levels get hit, and sometimes it takes 3 or 4 days for holding a daily level to get hit, and it's a 6 out of 10 risk assessment, which is perfectly fine. But there comes a point where you've passed that threshold and you're saying, like, oh, this can't be in this trade any longer. Like, I understand the hold levels, hold it, but you only have so much time before this thing's going to break. So you have to develop those shields. You have to. And then the 9 out of 10, the 9 and the 10 become more important because there's nothing left underneath. So when you're in a 10 out of 10, you only have a few has to develop. So that's why I say those are the more important parts. your knife catches are existing, the bottoms, the tops, it's those couple minute spans. So, 3 to 6 minute span is where that develops, and it is going to develop a shield. Hopefully that helps, Dak. I think that should help. Right, okay, thank you. Yeah, I would wonder, let's say in 100 trades, how many times you got a time bomb. I would say that when to best answer that, I would say you'll have more. This would be the best way you could answer, because just saying, 18 out of 100 times, therefore giving you 20%. Don't think that's really a good metric to go by in trading. Rather, when a time bomb is activated, I would like to say how often was that range held. So if I was making like a rule set for coding, like when I was working on AIX and we were making rule sets for things, and to say like, what would be the most important part of information when level gets tested. So when we were working on the AI charting back 4 years ago or whatever it was now, I don't even. Anyways, what the most important thing I would say, rather than how often did the time bomb get activated, because that would be one specific thing. A time bomb would be independent tests. They'd be like static independent tests, which would just kind of give you a bulk sample. The bulk sample wouldn't really prove anything. Rather, what I would rather do is I'd rather identify a range and say, how many times did a time bomb get activated? And the term activated means you took a trade and your time bomb made you get out of the trade. So how many times did your time bomb get activated and then not break the range? So you want to see how many times a time bomb gets activated and you exit your trade, and then it doesn't break the range, because every criteria underneath a rule set where you say it doesn't break the range means it would have to go after another level. So if this would be 1 on this yellow line, and this one would be 2, and this one would be 3, that would say you have 3 time bombs that activated that didn't break the range. So the more important piece there, Sam, if you were to try to create like a sample size or some type of meaningful data, would say, how many times did a time bomb get activated and the range didn't break? Again, because that would give you how many times you went after a deeper level. Kind of hidden data there would say, 4 times. So you didn't break the range and 4 time bombs got activated. That means the trade must have had a 10, it must have had a 9, it must have had an 8, it must have had a 7, and it must have had a 6. And maybe indeed the 6 was the range, the beginning of the range, the value, the backside on the higher time frame, right? So that would be like the more meaningful piece. That would be the more meaningful question to ask if you were to say out of 100 times. But more importantly, because that wouldn't give you, hey, there's pieces of that range where the time bomb got activated, but I went after deeper, therefore holding the range, and the incorrect level was selected to begin. But then also you'd have to put another rule set on that to see if it was incorrect or correct activation of the time bomb, because you could hit a time bomb, you could sink way down and release that time bomb under the same constraints. So you could have like a 3-minute trade where maybe there was a target here. The time bomb would have got activated if you didn't take your target exit. So then there's another kind of piece that you have to add on to that to say how many times was a target not hit. So if your target is here, you'd have to add almost like a secondary question that says how many times did that get activated, right? And goes after this third one. Then it hits this. So 1, but then it goes after the 4th one. And these 3 time bombs are actually all activated due to time frames. So 3 time bombs got activated because 3 time bombs collapsed. 1 trade was executed properly, meaning you only had 2 active time bombs because 1 hit target and then your 4th held, which actually would be a 50% of them hit, 50% held, because actually your 3rd time bomb hit target. So that wasn't a time bomb that got activated, but your first 2 failed to reach down to that target and then broke their time bomb. So they activated their time bomb, meaning that the time bomb got you out of the trade to protect your trade capital. Went after our 3rd target. So 1 and 2 activated, number 3 didn't activate. It did, but our target was hit, so we exited the trade. So regardless of it activating, we exited prior to the activation. And then number 4 actually held the move down, and that's also a trade that's still active. Again, therefore leaving 2 time bombs that got activated and 2 that didn't. So that's kind of like how you would have to look at it. If you were going to ask that question, you'd have to kind of develop like a rule set with some criteria surrounding it that would say, okay, regardless if they got hit, was the trade kind of like intentionally profitable trade, or was it something that like it would be a false reading almost to say like, oh, 18 out of 100. It would be a very static, meaningless piece of, see what I mean? So that would be an interesting way to look at it, Sam, if you were to start trying to create something where you had like a system for yourself, because I'm all about creating systems. I love that. And I think that would be a cool thing for teammates to do, right? Like create systems, teammates can do that together. And I think that would be super cool. Like create systems where you could say, oh, how many time bombs? This is basically what I did with all of AIX for 3 years. I created rules around these scenarios, right? So, and then AIX in the end, AI automated charting is just not possible with our current technology. Too much of it is created by hand still. It's just not possible. So there's like a different way you always have to approach those kind of questions. But again, then it founders some really cool kind of back testing you could do to really figure things out, right? I don't know if that's what you're looking for. And you're probably looking for something much simpler, but that's okay. I think that's a great way to tackle that question. Again, kind of anytime you want to think of, oh, statistically, how smart is this, right? Even with like risk assessment, statistically, how smart is this? Then you have to add the variables that would, complete the picture rather than just give you that kind of static result. That would be the smart way to do it. I did too much of that with AIX. For years on end, it was like this, always came back to this question of it's too simple. And even the most basic information always dwelled back to it's still too simple. It's still too simple. That was like kind of the synopsis of every single, still too simple. So the rule set becomes so massive that it breaks itself. Like it's very, to do it anyways, speaking with AI, not with human control, but with AI control, rule sets just become too grand and they end up causing conflicts with each other. Now that we're into base of moves, can you tell me how they differ from bases of a range? So the base of a move is really the kind of like, you want to almost think of it as polarity. Like the reason I taught it in Butterfly Effect the way I did, with Butterfly Effect, the whole thing was pre-planned. Like if you watch Butterfly Effect and then you get to the end of it, and then when Butterfly Effect 2 comes out, you'll see how it was like all very pre-planned. Like one subject goes into the next, goes into the next, goes into the next, goes into the next. You even learn about origins back in Future of Trading just to follow the trail of, okay, base of a move, hold levels that hold over time and create trends, interior ranges or reverse levels, and all these things kind of compound into each other. So when you're talking about bases of a move, Joe, what you're like, okay, here, so let's go to larger time frame here. Let's take off the replayer tool. We're talking about bases of the move. You're almost talking about creating polarity points, and like you go to the base of a move where something was created, where we've moved past that with risk assessment and reverse levels. So when bases of the moves were taught, it was to build off origins, but not to be at the point where reverse levels had existed, and to understand where polarity in the move happens, right? So a base of the move is a polarized point where a certain level is getting hit over and over. At that point, though, we didn't have reverse levels, like I hadn't taught it yet. You had to teach that as a base of a move. So a base of a move almost kind of operates between like number one, to overarch and to put a container on everything under bases of the moves is to rename it right now in this moment as polarity, just to say, which I also say in the video, it's just a moment of polarity in your chart, right? So really understanding what the polarity is more important than understanding the difference between a base and an origin, because if it's all about the founding components to the move, right? If it's a hold level holding the move down, it could indeed be the base of the move. Like for example, if it was this level here instead, holding it down, this could indeed be the base of the move, and all of a sudden you haven't hard closed the base. But prior to this hold level was actually the origin of the move, which told us that, this hold level just needs to hard close. This origin is going to create breakout. This hold level is just going to possibly create a ladder point. So really, when you're talking about the base of the move, it's kind of almost to combine all the theories into just starting to understand polarity, right? So what you're saying is you need to understand where the polarized point of that is, because these are two different data points that represent two different parts of the move. So again, if it's this, it's representing breakout. If it's this, it's representing trends and ladders, right? So the base of the move indeed could be either, but really where that base is created really just represents polarity. And why I kept saying polarity in that video, and I said, with the base of the move, let's call it what it is. It's polarity. So, and then in the following lessons, you get into reverse levels in lesson 73 or 70 or 72. And then right before that, you get into risk assessed moves, like assessing the risk on the base, right? And then even before that, you get into events, which is understanding the events that can happen and what they create. So the base of the move is almost kind of like the bridge into the final 10 lessons, where you're saying, okay, we have to understand polarity. So you don't necessarily want to mark the bases of moves as something on their own. Rather, they represent polarity. And then if you can find polarity, it may be the base of a move, maybe the leg of a move, it may be an origin level, and they'll all give you a different thereafter. So the base of the move really isn't something that you would go and create a separate criteria. Rather, it becomes like a bridge connecting piece. Like the base of the move represents polarity. So it's almost like, okay, we're about to end butterfly effect 1. What are the most important things after all of this is said and done? The deeper parts of starting to get into the charting before going into butterfly effect 2 would be the events, and how to understand where you start looking at risk and events, and starting to get into the reasoning behind these data point, right? Events, the reasoning behind the risk in which we take. So risk assessment, lesson 1 and 70 and 71. Is that what it is? No, 71 and 72. Risk assessed moves, starting to assess the risk in moves. And then reverse levels, which can also fill in another piece of what bases represent. So it's almost like you have to see that as the break into like, okay, now we have to start looking at polarity and understand the data as represented by events and the risk assessed, just put as risk assessed moves and the risk in each trade. Hopefully that helps. Replace the word base with polarity, and then reverse engineer where the polarity exists. Like find in that chart where the polarity exists, because the base of the move won't give you any important information. Rather than it's saying base equals polarity, and then reverse engineer where polarity starts from will give you your thereafter events and what needs to happen in order for either path A or path B to be completed. Didn't know if it's something to find when they're created or know what they mean on the chart. Yeah, so replace that word base with polarity. I get it. Thanks. Perfect. Okay, everyone. Ready for another crazy month.